Well, good morning, everyone. Welcome to our Thursday morning trading room. The market's just opening up. And opening up pretty much where they had left off from the day before. Wednesday session, a little bit of a seesaw again. The market heading down early, pretty quiet through the lunch hour, and then putting in a rally. Not quite recovering the whole range, but close. Very quiet through the overnight. A little bit active pre-market. But here we are with a little bit of a move lower right out of the gate. Almost suggesting a slightly more bearish market today. We'll see how things play out. Looks like we may have to wait for them for a little while to get their bearings. We're hopping back and forth here. Excuse me. It's okay to wait. A lot of people get anxious when they're trading and they see the prices whiz by higher and lower, and all of a sudden they start thinking, oh my gosh, I've got to do something. But what? Please, somebody tell me, what should I do? All right, so we do have a first micro-macro cross higher here. The Eagle and the Raptor both into the hard edge. We normally anticipate a reaction at that point. We may actually get a hard edge bounce. Well, the buyer's not letting go here. This first micro-macro cross in the Eagle now developing into a macro pullback and even a 4-arrow consolidation. So it's looking like, I don't know, are we going to get one more bull push? Almost shaping up that way. I've also got my eye on the euro dollar, which had a little bit of a move down pre-market, as well as gold. Gold a little bit stagnant at the moment. So here on the hawk, that macro pullback slash 4-arrow consolidation would have gone high enough to hit your high probability profit objective for a quick little scalp. So far, I don't know. I think I would favor the sellers just ever so slightly. Got a late filter entry here on the Falcon as well, so that's bullish. So we've got two tools that are looking bullish and two of the tools that are not quite so bullish, at least not yet. Yeah, Russell says he's thinking the bears are going to be stronger as well. It's this hard edge, right? Whenever the market encounters the hard edge of the trading band, you should always anticipate a reaction. It's not that the reaction is always going to be big, but there will be a reaction. We're actually working a green bar sell, which is a sell signal here on the eagle. We've got the warning dot. We don't have the completed formation yet. However, if they head lower, we could get some follow through on that. Ditto here on the Raptor, of course. So we're into the hard edge, and you can see price is pretty much just skewered by the hard edge of the trading band. Another late filter entry signal working here on the Falcon. I wouldn't consider these two independent signals because they're printing at more or less the same price level. I would consider them to be the same signal. I got a little bit of a bullish push out of that. only to get knocked down and put back into the sideways trading range. The yellow bars here on the hawk are suggestive of a sideways trading range developing as well. Wow, we got ourselves a tight little market here this morning. Can't do much with a sideways market, I'm afraid, besides wait, I mean. The good news is, with a sideways market, once we get a breakout, and the breakout holds, we should have a pretty good indication which way the market's going to go. And we should have a chance to take advantage of it. Seems like they're pretty happy where they are right now. They're hovering around the 60-60 price range. That'll be a number to bear in mind for Friday. When the market's consolidating like this, it's always tempting to do a bracket order. You know, we've got a market that's in a tight little trading range like this. You could use your OCO order and you could look to sell a breakout below and buy a breakout above. The only problem with that is sometimes the initial breakout fails, just as this breakout here from this range didn't have any follow through. Let's see what the breakout to the downside does now. Watching the Geiger counter, there is some selling going on. Oops. So there was a little selling wave went through the market. Was enough to breach the low. But is it enough? moving back inside the trading range a little bit, not so much as to suggest a full rejection of the breakout just yet. But it just emphasizes the risk in trying to take a breakout like that without the market actually confirming that it's going to get outside the trading range. Good trading friend of mine always used to say, never trust a breakout. And that's why. Okay, well, we're back toward the middle of that range now, still kind of flip-flopping. Andrew's watching the E-mini. He says the E-mini's going up. He says, so I don't like that. I think what he's referring to is the bearish break on the NASDAQ, because the stock indices do have a tendency to move together. Oh, thanks, Keith. Keith reminding me, pending home sales report at the top of the hour. That may spark the market a little bit. We'll see. What you want to look for when the market is sideways like this is you want to look for a breakout, a retest, and evidence that the market is going to try to stay out of that trading range. And likewise to the top side, a breakout, a retest. And these retests sometimes can be fairly prolonged. They don't happen right away. Sometimes, well, sometimes they do, and other times it could take 5 or 10 or 20 bars before it actually builds into something. All right, here come the sellers again, and you can see our prompt, we're getting a crossover sell. That's the counter trend trade. This would be an early trade because it's not the best looking counter trend signal. Remember, you need two components for a counter trend trade. First, you need a trend. Well, we do have a teeny tiny uptrend here. Secondly, you have a test to the extreme. Okay, that we got. Oh, sorry, my mistake. It's actually a cloud crossover, which is the with trend signal. But again, looking at the context here, a lot of sideways trading. Great question. Richard asks about the my comment about how do you know when the market is actually going to stay out of that on that breakout. All right, let's take a look at a couple examples. And this is actually pretty easy to do yourself if you just take a few minutes and go back through your charts. It's a good exercise. See if you can identify a trading range of sorts. And then watch what happens when the market breaks outside of the trading range. Okay, so here we've got now a bearish break. Watch what happens. Okay, there the market comes back, it retests, and now it's coming back and producing a sell signal. I would consider this a retest and that a saleable signal. What you don't want to see is you don't want to see the market get neutral again after a breakout. So here we've had a bearish break. If prices ended up going a little bit higher and kind of getting back toward the middle of the trading range, I don't think I would consider that to be bearish any longer. That would put the market back into neutral territory. If it makes a breakout like this and it reacts and it fudges the bottom end of the trading range, that's okay. Because you can see this trading range is not that precise anyhow. Some people will draw the bottom end of the trading range here. Others would have drawn it here. You can see there were additional reactions to the lows right here. So this whole area through here can actually be considered the support of the trading range. It's actually almost 3 full points from 60.60 all the way down to 60.57. But you're just looking for support of the breakout. And I suppose if it looks like the market's supporting the breakout, it is. So there's your retest, and then the market tries to give you a sell signal and it tries to head lower. Now, sometimes these things will be rather drawn out as well. Let's just see how this plays out. Okay, the market goes down a little bit, and you see it makes another retest. So the traders that were quick would have considered this to be the retest. The traders that were a little bit more conservative would have been waiting for the slightly more pronounced move. But in both cases, you can see we never really got very deep back inside the trading range. You wouldn't want to place your stop right there anyways, not to start, had you taken this first signal. You probably want to have your stop at least here and maybe even back here. So whether you took the first signal or second signal, you probably would be all right. And then prices fell off a little bit from there. But that's what you want to look for. It's actually, a trading range is a great opportunity if you're prepared to wait for it. Let's see if we can find, I don't think we're missing anything. No, we're still sideways. All right, let's see if we can find another one. Oh, well, here's one right here. We don't have to go too far at all. All right, so there's the trading range. The market has broken out. What happens after? This is the part that disturbs a lot of people, is they get the breakout and they see the market, especially, oops, sorry. Sorry, I hope I'm not making you dizzy. There we go. They get the breakout and they see the market do this and they say, oh, why didn't I buy the breakout? Well, because it will come back. And sometimes it will make a big move on the breakout, and this is very encouraging, actually. When you see that, when the market starts to retrace and come back, because of the strong breakout, I would be anticipating the buyers to be pretty aggressive when we get back down here around 60, 68, 60, 69. I would think the buyers would be all over buying this. And you can see they did try that. We didn't get a signal, but there was definitely some buying going on. but look at what happens. Oh, there's a breakout. Okay, now this one, this is strictly a judgment call. And unfortunately, there's no hard or fast rule that I can give you to say that this retracement is too deep or just right. You know, ideally, it would bounce very close to the top end of the trading range where it broke out from. Those are the ideal ones. Those are the ones that always make the textbooks. These that get back inside the trading range, these are a tougher one to make a decision on. You know, like I say, what you don't want to see is you don't want to see the market trading back inside the middle of the trading range. So I suppose if you highlighted the middle of the trading range somehow, you could say that the market retraced too deep or the retracement was shallow enough. If you chose to take a trade like this, remember there are ways that we can protect ourselves if it doesn't look like the ideal setup to you. What you can do is you can wait for a second push entry. Right? So we can allow the signal to engage, we can wait for it to flinch, and then we can place our entry above there. That allows us to only get in if the market has some renewed momentum. Regardless, you should still try to control your risk exposure. Even if you took it right on the hash mark. You know, you want to keep your stops at least 2 swings back to start. Maybe even below this, the low of the trading range. And then when it starts to move against you like this, and you get this little bit of a reactionary move, you do get a chance to start bringing your stops up again. Right? Because if the market starts to fail at this point, this is evidence that the buyers are going to try to support the breakout. They tried to support it here, not a lot of success. Sellers push it down. Well, now the buyers say, no, no, no. We're getting serious about this. We're going to try to support this breakout. So you can bring your stops up a little bit. I wouldn't necessarily jam them right in there, but, you know, give it a little bit of elbow room. And then if the trade goes, it goes. And if it doesn't, well, at this point, you could start to get either a little bit more aggressive with your stops or even bring them up there. But we'll leave them down here for now. So even if the trade does not work, oh, look at that, they're trying it again. Okay, and there you go, you get stopped out. So while your initial risk might have been $250, and that would have been 2% of my capital here, where I got stopped, it looks like I would have got stopped for, I don't know, 100, 120 maybe. So if this is 2% of my capital, I would have got stopped out at 1% of my capital. And the point I'm trying to make is those are not the kinds of trades that are going to ruin you. Right? The trades with the low risk, sure, it's unpleasant to have a losing trade, but that's not the kind of trade that's going to devastate your trading account. But unfortunately, sometimes it's a little bit of a judgment call. And when in doubt, use a second push entry. It delays your position a little bit, but very often it will help keep you on the right side of the trade. Okay, so here we've got a little bit of a bearish break now outside the trading range. And things are starting to look a lot more bearish, so I think our first opportunity here, we can probably look at a possible short. The hawk already producing that first micro macro cross lower. Oh, and there's that green bar sell that I was waiting for on the eagle right there. Again, because of the hard edge, right? You get to that hard edge, you expect a reaction. And that's what we got. Okay, so I don't know if we're going to get a cloud crossover now on the Raptor or if we're going to have to be on hold for a hard edge bounce. The Falcon trying to do a trend change signal. So the trend line changing color, here's that reaction, the bullish reaction to the trend change. And what we will be looking for now is for the sellers to come back and produce a sell signal. Okay, the hawk now giving us a macro pullback signal. Oop, come back here. I could get in on that with a second push opportunity. Oh, and they didn't slip me. How nice is that? What I'm going to try to do with this one is I'll take profit on one contract and I'll try to run out the other one, providing the market's going to try to head a little bit lower from here. Okay, still in the middle of that macro pullback. Okay, so the Falcon now producing the warning dots. If they head lower, there's our sell signal. Oh, and here's the crossover sell on the Raptor. So we'll get a chance to mirror the trade here on the Raptor as well. Good morning, Prasanth. Prasanth says, good morning, Eric. I'm late. What did I miss so far? Not a whole lot. The market's spending that first half hour pretty much just in this sideways drift right here. So we've broken outside. Here's the retest. Here now our crossover, cloud crossover signal. And the sellers trying to move the market a little bit lower. Looks like I hit my first profit target here on the hawk trade. I'll take the rest of the position to break even now. And maybe I'll get a little bit of follow through. No, you're going the wrong way. There we go. There we go. Now, we were talking about profit objectives the other day and how you can use your, ooh, all right, how you can use your support and resistance suite as a profit objective. I was just about to pull it down here to the 60-36 area when the market made a huge gap to the downside. Look at that selling that just made its way through the market. That's crazy. You don't usually see a market like the NASDAQ gapping, and yet there it was. Somebody pulled their orders, and we had a lot of follow through to the short side. Okay, I think I'm going to get a little bit more aggressive on my trailing stop here now. We'll move into the parabolic mode. The parabolic's a pretty aggressive stop strategy. I can also make the ATR strategy quite aggressive by changing the multiplier here, maybe going down to 2.0. Nice thing I like about the parabolics is that when the trend is developing, it gives the market a little bit of room, and then as the trend starts to slow, the stops get in tighter. So if you have the patience, the parabolics can offer you a pretty good opportunity. The only stop strategy more aggressive than the parabolics would be the bar high low strategy. All right, so that was a decent little move. Got tagged there on that quick little reverse, but that's okay. I'll take it. Hooray for us. Woohoo! All right, not bad. Not a bad start to the day at all. Our patience was rewarded. And actually rewarded very well. A little bit of a deeper retrace than I might have anticipated. So I got short at 60.49. And the market may well turn lower from here again, but I don't know. For me, it's just hard to be up. What were we up? 200 bucks there? Yeah, to be up $250 and watch the market take at least half of that back. But that that's trading, right? It's a very personal endeavor. So I can tell you how I may handle a situation, but that may totally rub you the wrong way. You may not want to do it like that. Hey, way to go, Dan. Dan says, I just made my 2 trades for the day, $195. Nicely done. Good job. Prasanth, taking $200 out of the market. Good job. Well done. Keith, taking $175. You guys are killing it here today. Good job. Prasanth is asking, when will you move the Falcon indicators to NinjaTrader 8? All right, if you're asking when am I personally going to move, probably not for a long time. I tend not to update operating systems or upgrade software until I know the new version is totally stable. But that's me. As I've mentioned before, I think I was probably the last person to upgrade from Ninja 6.5 to Ninja 7. And I had to do it because of the DTS system. Otherwise, I'd probably still be running Ninja 6.5. Ninja 8, I don't think has anything really to offer the DTS system. I know it has some cool features, most of them cosmetic. But the problem with Ninja 8 is there's still a little software glitch with the trade manager that hasn't been resolved yet. The programmers are working on it, and Adam hopes, the programmer said it would be resolved by the end of the month, but he's told Adam that before. So Adam's shooting for the end of the year that we'll have that trade manager glitch resolved with Ninja 8. Yeah, Prasanth says, good point, Eric. Ninja 8 still crashes on me. I haven't seen Ninja 8 on the DTS platform, but from what have seen about Ninja 8, like I said, most of the changes are cosmetic. They do allow you to do a couple of different things with your indicators, but that's non-DTS specific, so once more, it hasn't really been a priority. Yeah, I agree. Prasanth says, if anything, the trade manager is more important for NinjaTrader 8 since we have the Raptor already. Yeah, the trade manager, you know, it's such an important piece of software. Way to go, Mark. Mark says, over the last 14 days, I've taken 47 trades. averaging just over 3 trades a day. Now, everybody think about that for a moment. 3 trades a day. 41 have been winners, 6 have been losers for a gain of $2,401 in 14 days of trading. That's pretty darn good. Nice job, Mark. Mark says, DTS and the NASDAQ have been very good to me this month. Yeah, getting a lot of kudos here for you, Mark. Well done. But I think the lesson from that is that you don't have to take a lot of trades, right? I see this all the time. People come to me for coaching. They're wondering why they're not making any money trading. And almost without exception, they are over traders. If you're not making money trading, that is the first thing that you should look at is how many trades am I taking? Once you learn to limit the number of trades you're taking, if you're still taking losing trades, then you need to start asking yourself, well, why did I take that trade? And the only way you're going to get to that answer is if you keep a trading journal. I'm sorry, it's really not that hard, but it really is the best thing you can do for yourself. Just next time you're at the Walmart, go grab yourself a spiral notebook. It's going to set you back all of $2. Spend another 50 cents on a pencil or a pen. And when you take a trade, don't only record the entry and the stop loss and the profit or loss, but record why you took the trade. What made you get into this position? Why? Why did you take it? I find if you have 2 reasons for taking a trade, you're probably going to stay on the right side of the market. If you look at a chart and you can't give yourself 2 reasons for taking a trade, then you should probably stand aside. Yeah, like Mark says, thanks everyone. Patience and selection of high probability trades has been my niche. And again, I think that's just so important. Michael asking to take a look at the mid cap. Yeah, definitely. Hold on here a second. Michael will load the mid cap up and I will bring it over for you. So the mid cap, that's the EMD, S&P 400. It tends to be a very stable market, tends to be a good trending market. Let me just see how the daybreak lines are falling here. Oh yeah, okay, so the standard, it looks like the standard settings will work just fine for the mid cap. This was yesterday's move. You can see what I mean about a good trending market. Once it picks a direction, just hang on. This morning it looks like we're a little less decisive, however. Kind of moving a little bit sideways. Getting a sell signal now. And I think the markets have a slightly bearish overtone today. Let's see, what would that cost me to be wrong? Oop, that one's a little bit out of my reach. Let's see here. Shouldn't be that much. Yeah, $300 do that counter trend trade. The mid cap is another one of these markets where our high probability signal for the Raptors, or profit target for the Raptors, normally $100. However, because the mid cap has such good follow through, I will tend to double the profit objective. So that's why we have a $200 profit objective here. It's pretty quiet, really. It's just kind of stuck in that sideways trading range that seems to be holding up the markets or constraining the markets at the moment. Yeah, Michael says the mid cap seems to move very slowly as the data comes in at a snail's pace. Because it's the S&P 400, and because the markets have been so quiet lately, I can see that on the mid cap that it would be slower still. Stephen asks, I have a question. Today, one of my indicators has disappeared called Custom Crosshair. I had to re-download it from the support forum. Did this happen to anyone else from yesterday to today? I don't know. So if anybody else has had that kind of issue, here's a tip that Ben gave me ages ago, because I would start to have a problem with my workspace, with my charts. Something funky would happen, like my indicator disappearing. Ben told me when you close your workspace and you get the prompt, do you want to save the workspace? Most of us hit the default yes. But he said that unless you've made a significant change to your workspace, click no. Oops. There we go. Crisis averted. So what constitutes a significant change? Well, if we change the contract month, or if we changed, I don't know, indicators, or whatever. If you made a change that you want to be a permanent change, when you close your workspace at the end of the day, then you should save it. Otherwise, he said, don't save it. Because what happens is it keeps rewriting over the file, and the possibility is there that you're going to corrupt the file. So if you don't need to save, if you haven't made any new changes and you don't need to save your current format, again, don't. And that may help alleviate a problem like what Stephen had, where all of a sudden your indicator or something has disappeared. All right, well, watching the buyers push the market back all the way to 60.49 makes me very happy that I took my profit where I did. We had this little bit of a double bottom form right here. You can see the Raptor gave us a counter trend signal to buy off of that double bottom. Target is the hard edge. So nice little uptick. Well done, Prasanth. Prasanth says, I took that counter trend trade for another 150. I'm done for the day. Well done. Good job. Yeah, no problem, Stephen. Says, Eric, can you please open a YM chart? Coming right up. All right, so here now the YM had the signal here pre-market, a little bit of a run up. The YM also kind of constipated here at the moment. The YM's a good market to trade as well. It's only $5 a tick, so it's very affordable for smaller traders. It tends to trend quite well. Here's a nice example of a good counter trend signal. See how broad that band is? When you start printing number 2 signals like this, you just know it's going to go back to the hard edge. This is a very, very oversold market. And you can tell that by the width of the band. Uh-oh, Steve's having issues here with his Dow chart. You may need to reboot your NinjaTrader, Steven. It sounds like you may need to restart it. That's the cure-all for a lot of computer ailments as well. Hey, good job, Mark. Mark says, took that early trend change on the Falcon, expecting a bounce up to the Eagle hard edge, and got it for $250 on 2 cars. Way to go, guys. You guys are just crushing it here today. So this is the early trend change here on the Falcon that Mark's talking about. Nice support here on the support zone. So prices came down to the support zone, retested it, retested it, retested it, and all of a sudden we come back with a buy signal. And back to the primary support. So after that little run up, now everything's kind of gone quiet again. The euro is dead sideways, but it is near closing for the European session. Talking about that trading range. So if we identify this as our trading range right here, sometimes, okay, well, we had a couple of retests. First, we had this retest right here. This one is textbook. came, bounced at the trading range, came out, gave us a sell signal. Those are beautiful. That's going to end up in the textbook somewhere. This one is a much more protracted one, isn't it? It's really drawn out. It's taken about a half an hour to develop, but it is still testing the trading range breakout. So as we get higher, we'll look to see whether the sellers decide to come back into the market and try to short the market again. Could be interesting. Uh-oh, Ben having an issue here. Ben writes, do you have a link that you could send me to help me to better learn how to use the trade manager? I'm in sim mode. I did some testing and I would win the trade, but as soon as I did, the audio would say order canceled when clearly I had won. I'm a little miffed. Yes, I bet. Okay, so if I understand you correctly, let's say you're looking at this signal right here, or wait a minute, we'll use this one here because it's already gone somewhere. So you put on your trade like this, the market goes up, hits your profit objective, it says order canceled, but your P&L still says 0. Okay. Oh, okay. Ben says P&L shows the win. Well, everything is working correctly then. I don't know why the system says order canceled. I think what it's doing, Ben, is, okay, we're in the trade. So when the order is engaged, it will say order filled, or whatever it says. Then it gets up here. It hits your profit objective, and then it says order canceled. Well, it's not this order that it's canceling. It's this order here that just got canceled, your stop loss order. So your trade is flattened, and then it cancels your trailing stop so that you don't have to do it manually. No, if you're recording the P&L, you're in good shape. If you didn't record the P&L, then you may have to email support. Wow, we're getting quite the little rally now. The buyer's stepping it up. So here the hawk getting that nice little first micro-macro cross. It's such a reliable signal. There's that first micro-macro cross. Gave you a little bit of heat on it, but really nothing serious. And a great run higher. So another wishy-washy kind of day. We start with the move lower, followed by a move higher. And we're back in that 60-60 range, so pretty much where we started. Oh, okay. Ben's actually here on somebody else's link, so it's Rick. Okay, I'll remember that. So yeah, Rick says he wrote me about the support and resistance suite that he picked up the other day. Did you get the problem resolved, Rick? Because you probably got the error when you first loaded saying you don't have enough days of data loaded. So if you right-click on your chart and you go down here to data series, you need to have at least 10 days of data loaded. And then click apply, and that should resolve the issue. So where's our next zone? It's up here, it's the median line. While we're waiting, good time to go over the support and resistance suite. The support and resistance suite is an assortment of 21 support and resistance lines, which are forecast for today's trading. The three lines in the middle are the gold line and the two blue lines. The gold line is the median line. That tells you you're right in the middle of the support and resistance lines. It doesn't make it stronger per se, but what tends to happen is if the market is trading below the median line, we're usually a little bit more bearish. If it's above the median line, we're probably going to be a little bit more bullish. The blue line above and the blue line below, this is primary resistance and primary support. These three lines tend to set the tone for the day. If the market is below the primary support, again, we're going to be a little bit more bearish. If it's above the primary resistance, we're going to be a little bit more bullish. Many times what will happen is if the market breaches the primary support or the primary resistance line, it will move two zones. Today it only moved one zone. It only got down to 60-36. But very often it will move two zones, in which case we would have been looking here at the 60-21 area. Let's go back a little ways and I can show you. Come on, here we go. Oh, well, yesterday we actually moved much more than just two zones, but here we ended up bouncing off of the median line, getting a sell signal, the Falcon trend change signal, producing just below the primary support, and immediately it goes one zone, two zones. So that's usually how it works. Yesterday, again, very, very aggressive. We moved in all 1, 2, 3, 4, 5 zones. That's huge. That's a huge move. Some traders like to use the support and resistance lines to confirm signals. They also like to use them as places to put stop losses and profit targets. So if, for instance, you were looking at this early trend change signal, some traders will place their stop loss down here and they'll set their profit objective back here at the primary support zone. Or if you're swinging for the fences, you can set it up there to the median line. Then what will happen is when prices confirm the support zone, they'll start to roll their stops up. So they'll bring it underneath this support zone now. And then when they breach this support zone, then they'll bring it up some more underneath there. Those are the most common ways of using the support and resistance suite. But people are always telling me about new things that they're doing with it, which is pretty cool. Okay, so Rick is asking, one of the things I see is that signals are given, but not sure which ones to trust. Are you using the DTS system as well, Rick, or are we just talking support and resistance suite right now? Okay, so you've got the Raptor 2.0. Well, that's why we developed the signal prompts. The signal prompts are there to alert you to what the programming considers to be high probability signals. So when you produce a number 1 signal, that tends to be a high probability signal, a number 2 signal, again, a high probability signal. Even though some of these secondary signals also worked out, they would not be considered high probability signals. They're what we loosely refer to as the advanced signals. Not that they're advanced in that you have to be smarter in some way or learn something to use them, but rather they're a little more discretionary. That's probably a better term for them. We should start calling them discretionary signals. So now we have a number 1 signal developing on the Raptor. That's the cloud crossover. That's the Raptor telling us, hey, looks like a new trend is developing. You may want to pay attention to this. Once the Raptor prompts us to a signal, now it becomes a matter of logistics. Ideally, we want to use the trade manager to contain our risk. Now, depending on your account size, the ideal risk percent is usually considered to be around 2, maybe 3%, certainly less than 5%. If you're risking 5% or less of your trading capital, you're probably going to be okay. You start to run into problems when you're risking or routinely risking 10%, 15%. I think back to my very, very first trade about 25 years ago. I risked 50% of my trading capital. Not smart. I'm lucky the trade worked out. Or I would have had a very, very short trading career. Okay, so now we get the signal problem. Now it's a matter of logistics. How are we going to trade this? Well, I've got my risk capped at 2%, so if I choose to enter on the hash mark, where am I going to place my stop? Well, usually I want to place it at least 2 swings back, even if I consider this little hiccup here a swing and this one a swing. I would at the very least place my stop down there. Well, the trade manager says, no, sorry, Eric, for your capital, you cannot afford that trade. All right, well, let's say I really, really, really want to take this trade. Well, where do I risk it then? Well, I could try to risk it back here to the hard edge, which is also below the primary support zone. That's that blue line that you see right there. Trade manager says, no, sorry, Eric, that's still too far away. So what do I do? Well, if I'm smart, I'd probably wait for a better setup. Maybe a hard edge bounce or something where I can get into the trade with less risk. But if I really, really, really want to take this trade, I could use what we call a second push entry, which means I let the signal engage, and then I wait for the signal to flinch. Now I know the current limit of the buyers, so I can place my entry above that zone. This will enable me to get by with a slightly tighter stop loss, but the overall riskiness of the trade is not very good. This is probably like a 60-40 type trade. Well, here, we'll do it. We'll sim it. There's probably a 40% chance, or pardon me, a 60% chance this trade will fail. That the market will come up, engage my order, and then reverse and hit my stop loss. Because my stop loss is really quite tight. We've already seen that a proper stop loss would have me somewhere back here, and ideally even below the last major swing low. Now, just because your stop loss starts there doesn't mean it has to stay there the whole time. But to me, in trading, there's few things worse than a premature stop out, right? I would hate to get brought in and then have the market reverse, and I know this from experience, it does this a lot, stop me out, and then, boom, go up to my profit target. I hate that. I hate getting tagged for a stop when I should have had a profit. I was right, but I was wrong. And I was wrong because my stop loss was too tight. So we'll see whether they bring us in now on that second push. Scott says, did you say 50%? Yes, sir. I had half my trading capital at risk on my very first trade. Not recommended, by the way. All right, so they brought us in. Did they slip me? Nope, didn't slip me. Good. So let's see if I can get by on this one. See, there's the reason the trade manager won't allow you to take some trades. It's not that the signal isn't viable, but maybe given your circumstances, it's not a suitable trade to take. Rick says, I better understand how stops work better. I would have extended stops, but I would get stopped out sooner than I wanted, so I see how that happens now. You see, there is such a thing as a proper stop. Some people will say, no, there isn't. Yes, there is. And it's not based on a dollar amount. Well, it loosely is. It's based, in our case, on our risk, a percentage of our risk. But the proper stop, the correct placement for a stop for this order is down here. That is the correct place to put your stop loss. Because this is the place where you can say, I was wrong about the trade. Well, made a bad decision. The market obviously no longer in an uptrend. Well, how do you know it's no longer in an uptrend? When it trades below this low, then you can say with a great deal of confidence, I was wrong. However, if you get tagged here at 60.56 3/4, can you still say that? Can you say with a great deal of confidence, I was wrong about the trade? No, you can't. So what's likely to happen is if the market does not go up, it's going to try to come down, and somewhere through this whole thing, it will find support, probably near the hard edge, at or near the hard edge. And then it will react. At this point, when it starts to react, and usually I like to see 2 bars in my favor, then I can bring my stops up. So while my initial stop was down here, now I've effectively reduced my risk exposure by half. And so then the market may come up and it may waffle a little bit more, and somewhere through here it will once again make a reaction. Now if the buyers are serious about rallying the market, it will be a bigger reaction and the market will keep going. If the buyers are losing their grip, well, it's going to be short-lived and the market will start to reverse again. At this point, I can either just bring my stops up or just close out the trade entirely, or I can just leave this amount in play and hope that the buyers make one more push higher. But just by watching the swings to see who controls the market, you can get a pretty good idea when it's time to start rolling your stops. Scott says he likes to use Bollinger Bands on his Raptor to help stay out of false signals. That is a nice thing about the DTS system, is it's robust enough that you can put other indicators on. You know, whether it's Bollinger's or where are you here, stochastics, or you know, whatever. The criteria is always the same. Does having the Bollinger Bands on here help you make a decision? Does having the fast stochastics on here help you make a decision? Because believe me, you can keep adding and adding and adding until you got so many lines on your charts you can't make a decision any longer. If the stochastics don't help you make a decision, if they start to conflict with what you're seeing on your chart, get rid of it. If the Bollinger Bands don't help you make a decision and conflict with what you're seeing on the chart, get rid of it. Believe it or not, the ability to make a decision is more important than being right. I know you're going to think you didn't hear right. But the ability to make a decision is more important than being right. Because what happens is you get so many people who hum and haw about the trades. Oh, I got a signal here. Should I take it? Shouldn't I take it? What should I do? And then by the time they make up their mind, the market's already down here, and it's like, oh, I should probably sell that now. And then what happens? Oh, well, the market starts to go the other way. Oh, should I buy that? Oh, I don't know. Right? This is how most people trade. So the ability to make a timely decision is more important than being right. Why do I say that? Because, well, first off, you're not going to miss these opportunities when they develop, and the time that you do make a bad decision, you've got yourself covered because you haven't risked more than you can afford to lose. Very important. Scott says, oh, I meant the Bollinger Band Suite from Indicator Warehouse. Yeah, it doesn't really matter, you know, what your other tool is. The end criteria is the same. It has to help you make a decision. It's not the tool. I get so many people. I frequent some trading forums, and every once in a while I got to take a break from them because the questions are always the same. What are the best settings for my stochastics? How should I be using RSI? Do Keltner channels really work? What's the best way to use support and resistance? Well, that one I can actually deal with. That's a fair question. And on and on and on it goes. People get so caught up in the process, they forget the objective. The objective, of course, is to make money. And yet we get so sidetracked tweaking our indicators, adding another layer of indicators, that soon we can't see straight. You can't hardly even see the chart underneath. I won't do it on this, but hold on a second. I'll build a chart here, and this will be a good way to finish out the day. This is an actual chart. I had to save it because it was one of the craziest charts I'd ever seen. And this fellow came to me for some coaching. This was his chart. This is what he was trying to trade off of. How many more lines do you want on your chart? So he had, actually I think he also drew regressions on here, but here you've got linear regressions, you've got at least 3 different moving averages. How in the world do you make sense out of this chart? So I would ask him to show me a signal. And this is how the conversation went. Oh, well, I would probably end up, I'd end up buying here, and then the market went up, and I'd probably sell here, and I'd probably end up selling here as well, and the market would go down. Yeah, okay, well, if you bought here and the market went up, and you sold here and you sold here and the market went down, why are we even talking? Oh, well, because I'm not making any money. Well, you're not making any money because you're trading in hindsight. You're going through your chart saying, oh, well, I would have done this and I would have done that. When in actual fact, you probably bought here and the market tanked, and you probably sold here and the market rallied. And I'm not saying this to be insulting or demeaning, or please don't ever think I'm talking down to anybody. Because we all start in the same place as traders. There is no school of trading. There is no technical institute that you can go to learn how to trade. Well, I guess the only school is the School of Hard Knocks. That's where we learn how to trade. Yeah, like Scott says, it looks like Fruit Loop spaghetti. And that's just it. Compare that with this chart. This chart, you have a signal. Now it's decision time. Sorry, I've been preaching too long already. My tongue is swelling. Now you have a decision to make. And like I said, now it becomes a matter of logistics. Can you afford to take the trade? If you can, then take it. Ray Burke and I always used to have fun with this conversation because people would always say, this was in the infancy of the DTS system. Hey, Ray, I'm getting a red bar buy signal. Should I take it? And Ray would always say, can you afford the trade? Let's see, can I afford the trade? Well, I'll use that as swing one, there's swing two. Yes, I can afford the trade. Well, then take it. If you can afford this amount, take the trade. If you're uncomfortable with this amount, change this value here. Do not set up your trade like this in an attempt to reduce your risk. Because all you're going to end up doing is strangling your trade. You see, Trade Manager keeps your risk constant. So whether your stops are tight or your stops are loose, the risk amount stays the same. But what changes are the probabilities. The probability that you will get stopped out with your stop right here is probably pretty good, at least 50-50. The probability that your stop will get hit down here is probably very poor. Maybe 20%, 15-20%. The probability that you will not, that the market will make a beeline straight lower and you will have no opportunity to adjust your stop at all is probably nil. Somewhere through here, the market will give you at least one opportunity to adjust your stop. So while my initial risk may be 400, chances are pretty good if the trade goes sideways on me, I'll probably get stopped out at half. So if 400 was 2% and I get tagged for $200, well, that's going to be a 1% risk of my capital. And like I said, those are the kinds of trades you're not going to ruin yourself. You can risk 1% all day long and not ruin your account. So this is how you have to approach trading. And this is also why I keep saying, you know, focus on the best opportunities. If you have a trade quota for yourself and you're only looking to take 2 or 3 or maybe 4 trades in a day, would you still consider this to be one of your better opportunities today? No, probably not. You may choose to pass on it and maybe wait for a hard edge bounce. If you get a hard edge bounce, that would be a better opportunity. Right? So, you know, be selective. There's nothing wrong with being choosy. There's nothing wrong with missing a trade either. I would rather miss my counter trend opportunity and watch the market go through the roof than get stuck in a sour trade like this, wondering whether I'm going to get tagged for a stop out. All right, so, you know, be choosy, be picky. It pays. It pays to be picky. It really does. All right, ladies and gents, I think that's going to be it for today. If you're going to continue trading today, Well, the buyers certainly have the upper hand at the moment, although we have moved into a little bit of a sideways zone again. So maybe we're going to see the broader trading range develop today. Might see another push lower. Yeah, like Russell says, rather be out wishing you were in than in wishing you were out. That's one of my favorite trading quotes as well. Okay, if there's no other questions, we'll button up shop for today, and I will see you again tomorrow. We'll talk to you then. Bye for now.